If you're trying to really get a business loan, it's not just about the amount or the interest rate they're giving you. You got to really pay attention to what I call the clauses in general. Okay. It's important to really know how to read a business loan offer because the last thing you want is to agree to something that you really don't understand. Okay. So, in today's conversation, I want to explain to you some hidden fees you need to really pay attention to, some hidden clauses, some hidden some hidden language, or let's say a convoluted language you need to pay attention to. Again, don't just look at the loan amount and say, oh, hey, I have 100 grand or 200 grand. I can just go about expanding my business and fulfill my dreams. No, it's really, you have to really make sure there are no strings, quote unquote, attached. So here's an overview here. One thing you need to really understand here is that business loan fees are actually everywhere. And lenders, it's not just because lenders are trying to catch you or get you, or so to speak. Lenders are protecting their business model too, right? They are mitigating risk because anytime you have a business loan, you have an element of risk. Not only risk at the personal level, but also at the business level, right? Something can happen and the loan might not be repaid. And if the loan is not repaid, the lender is losing money. Okay, so you have to really keep that in mind. The lender is losing money all the time. So they have fees to actually protect themselves. So when I say business loan fees, I'm talking about all kinds of fees, okay? And these fees, by the way, can affect your monthly payments and overall cost of loan. So you got to know what fees are actually embedded in your loan documents, okay? Typically, you can find the fees in the fine prints once you receive your loan agreements. Some lenders may also disclose their fees upfront on their website so that you are aware of them before you even apply. One thing I know from experience is that very few lenders will be transparent about their fees because they will bury their fees in the fine prints, and they know the majority of borrowers don't read the fine prints. Okay, and the fine prints are actually very important, and you want to make sure you read them, you understand them, and that you know their implications because their implications can be really extensive, especially if you have, let's say, a 5-year loan or a 10-year business loan, for instance. So let me talk to you about the types of hidden business loan fees. So if you think about reading a business loan offer, you have to really pay attention to a few fees. For example, you have application fees, you have origination fees, you have late payment fees, you have prepayment fees. I want to really dissect each of them, so you have a clear idea what they mean. So when I say application fees, lenders are charging you just to process an application. Okay, so if you like to take out a loan, you'll be required to fill out an application online or in person. If you're talking about going to a bank or a credit union, it will be in-person application. But if you do it online, basically it will be an online application. Some lenders may try to charge you an application fee in order to compensate themselves for reviewing your loan application, analyzing your documents, and pulling your credit score. And depending on the business lender, application fees may be charged upfront or rolled into your monthly payments. Okay, what I know from experience is that alternative business lenders will actually roll those application fees into your monthly payments. Besides application fees, you also have origination fees. That's what a lot of consumers know. So origination fees are like they're a lot like application fees because they pay lenders for the administrative expenses of making you a loan offer. And oftentimes you will be charged either an application fee or origination fee. You can expect origination fees to be flat fees or a percentage of your loan principal. However, they might also be lumped into the loan itself. So you can have origination fees all the way to 10%. I've seen even 12% when it comes to online lenders. But in the business loan space, you have mostly like a 7% to 8%. You also have late payment fees. So when you think about late payment fees, this is something that's actually depending upon your payment responsibility. So ideally, as a small business owner, you want to make all your payments on time, right? But stuff can happen. Maybe you might have some cash flow disruptions. You might have some cash flow problems, and you may miss a payment every once in a while. So if your payment is past due, lenders may charge you late fees. These fees are usually flat fees or a percentage of your loan's outstanding balance. You can easily avoid late fees if you enroll in automatic payment deductions and keep enough money in your account. So this is pretty good to really think about. And you also have prepayment fees. So paying off your loan actually early can save you a great deal of money on interest. But if your lender charges prepayment penalty fees, it may cost you a lot. And unfortunately, some lenders do penalize borrowers for early repayment because it takes away from their profits. So if your goal is to pay off a loan before its term comes to an end, make sure that you won't be on the hook for a prepayment fee, something to really think about. So when it comes to reading a business loan offer, especially when it comes to hidden fees, you also have to pay attention to NSF fees, closing costs, draw fees, and guarantee fees. Those are important in terms of flexibility. Let me first talk about NSF fees. I mean, you probably heard of NSF fees because it's also applicable to individual banking, right? If you have a checking account and you actually bounce checks, you will be charged NSF fees. So if you decide, for instance, to enroll in automatic deductions to repay your business loan, you have to pay a non-sufficient funds fee anytime a lender deducts the money, but there is not enough of it in your account. Non-sufficient funds are almost always flat fees. They can add up quickly if you don't keep an eye on your checking or savings account. You also have closing costs. So, contrary to popular belief, closing costs are not only for mortgages. Okay, a lot of folks believe that yeah, it has to be only mortgages. No, even for business lines of credit, business loans, working capital loans, you might actually have some cost during the closing process. Now, you might notice those closing costs when you initially take out a business loan, and closing costs are usually made up of all the fees you'll need to pay, including origination fees, processing fees, and others, okay? And if a lender does charge closing costs, finding out exactly what they are so you can ensure they are legitimate is actually always important. And you want to do this actually at the very beginning, okay? And you also have draw fees to think about, draw fees. And draw fees are commonly seen with business lines of credit. So every time you tap into your business line of credit, you have a certain amount to actually pay. Okay, and this fee will depend on the lender. So draw fees are essentially origination fees and charged as a percentage. You will likely have to pay a draw fee the first time you borrow money from your business line of credit once the funds have been distributed to your bank account. And you also have guarantee fees. So while SBA loans come with countless benefits that you may not find anywhere or elsewhere, they do have guarantee fees. They are fees incurred by lenders for the SBA guaranteeing a large percentage of their loans. While every type of SBA loan has its own requirements, most SBA guarantee fees are due within 90 days of when the loan is approved. Okay, and these fees depend on the loan amount and repayment terms. So this is really important. So bottom line is what you have to really watch out for hidden fees for a business loan. Hidden fees play a significant role in how much you pay for your loan, which is always why it's a good idea to shop around and compare your loan options. One thing I have to say here is that, you know, if a lender advertises no fees, just make sure that you understand what no fees really means because they might actually charge you more in terms of APR, so interest rates, okay? Or let's say they have requirements that are difficult to actually fulfill, okay? Let me give you a few hacks here. If you're trying to rate a business loan offer, you have to understand that it's all about possibilities. And how do you spot hidden fees in business loan offers? One thing you really need to understand is that you have to like spotting these hidden fees early helps you avoid budget issues, maintain cash flow, and choose a lender you can trust. And what you want to do is actually dissect a business loan offer. You want to read everything from start to finish. Don't just rush through it. No, You want to read everything from A to Z, okay? And because the business loans will always include hidden fees, that's their way to actually make more money, but also protect themselves from risk, okay? And you have to really understand that it's a pretty risky field to actually lend to businesses, and lenders have to protect themselves not just on one transaction, but also as a whole basket of transactions. Okay, and don't forget that you have those eight types that I just shared with you: origination fees, application fees, prepayment penalty, maintenance or servicing fees, draw fees, late payment fees, closing costs. What I want you to do here is to actually give the customer, not the customer, call customer service and ask them before you do anything. Ask them. You want to ask the uh, the lender about their hidden fees. They'll tell you. They'll tell you whether or not they have hidden fees. And this is what you want. You want to make sure that if you have those fees, you can actually at least have an idea about them at the very beginning. Don't be surprised, right? That's the last thing you want. You do not want to be surprised because those surprises are not really good. Okay. So it's all about taking some time to read, especially if you have large amounts that actually span over several years. If you have, let's say, a $500,000 business loan that has to be repaid over 10 years, for instance, that really, you can really spare 30 minutes to actually read the business loan and make sure that you are really, really comfortable with the terms and conditions, okay? Because this loan will actually commit you. So let me give you a few taxes here. So how do you identify hidden fees before signing? What you want to do is you want to compare APR, not just interest rate, because people always pay attention to an interest rate, interest rate, interest rate. No, the APR reflects the total cost of the loan, including most fees. And a low interest rate and high APR usually means hidden charges are involved. Let me give you an example. Let's say a bank is telling you they're charging you an interest rate of 10%. But when you do the APR, when you actually look at the APR number, you'll see that it's 13%. So that way you know the delta between the interest rate and the APR tells you there are a lot of hidden fees. So you go back and read the loan offer. And what you want to do also is to request a full fee breakdown. So ask the lender to provide a written list of all fees, including one-time and recurring charges. And if the lender is hesitant, this is actually a red flag. You do not want to do business with them. You want to keep looking, right? Because the last thing you want is to be charged a very hefty, let's say, a very hefty hidden fee, okay? You also want to read the truth in lending disclosure, the TIL. And this is an important element. The TIL is actually a federally mandated disclosure, okay? So this federally required form outlines your total loan cost. You want to compare it with your agreement to catch discrepancies. You want to use a checklist. So review sections labeled fees and charges, repayment terms, late payment policies, okay, or prepayment conditions. Those are actually areas where you could really catch some kind of discrepancies. And also you can just reach out to customer service, call customer service and ask direct questions, okay? It's all about transparency. And only you can really seek transparency from the company, from the lender. So you can ask, for instance, is there a penalty for paying off the loan early? Are any fees deducted from the loan proceeds? Are there any monthly or maintenance fees? What happens if I miss a payment by 1 day, right? Those are things to really tell you a little bit to contextualize your new loan offer. So let me give you a quick example of a real life example of overlooked fees. And I'm going to put this on the screen because I want it to be clear to everyone. It's important to understand that basically, let's say you're a business owner, right? And you just secured a 75,000 working capital loan with an 8% interest rate. Like the business lender tells you or told you that you're paying 8%. That's the interest rate, okay? Now, 8% is pretty reasonable. Anytime you have one digit in interest rate, that's pretty reasonable, right? But after closing the deal, you may discover that you have a 3.5 origination fee, which is actually that amount to 2625. Think about it. 3.5% of 75,000. That's 2625. That's a lot of cash. If you think about it, it's a lot of cash. You also have a $100 a month servicing charge, which is not really good, and also a 4% prepayment penalty if this is paid off within 18 months. Okay, and this is actually pretty high, because in the end the loan cost significantly more than advertised. Okay, so a quick fee audit beforehand could have prevented this mistake actually. Okay, like I said, you want to ask questions at the very beginning. You want to use a checklist looking at sections such as fees and charges, repayment terms, late payment policies, prepayment conditions, and also let me give you a few red flags that actually suggest hidden fees. So be cautious if the lender rushes you to sign. Like anytime they're asking you to sign real fast, this is a red flag. And if the APR is much higher than the interest rate, that's actually not very interesting. Okay. And if you can't find or understand the fee section, that's really bad also. And if you are told fees will be explained later, you do not want to wait for later to have actually some kind of explanation. You want the explanation before you sign anything. And also, no amortization schedule or cost estimate is offered. That's really bad too, because again, anytime you have a dearth of transparency, that tells you a lot that something is happening, and you do not want to have that to your business loan. Okay, and also, especially if the loan amount is kind of high. And again, what I'm telling you is applicable to all kinds of business loans, not just business term loans, but you also have working capital loans, business lines of credits. Okay, business lines of credits. You also have, there are other loans. If you want to avoid fee surprises, like if you are reading a business loan offer and you want to really get away from hidden fees, you want to avoid fee surprises, always compare multiple loan offers using APR. So my thing is that when you actually compare a loan offer, don't go with the interest rate. Never go with the interest rate. Interest rate is just a number, but an APR is more a holistic number. That's your total, that's your actual cost. Okay, so it's important to compare multiple loan offers using APR and work with lenders who offer full documentation upfront. Not later on, not after you sign, not like in the process, no, upfront. So you can read it, you can really see what was happening. Okay, you want to read the entire contract before signing. Like I said, if you have, if for any reason you don't have time or you don't have the expertise to read the entire contract, pay someone. I mean, you can pay a lawyer $100 or $200 to read a loan offer, a business loan offer for you. That's really good. Or you can just let me know in the comment section if you're interested. I'll read the entire contracts for you. Okay, and I'll do it for free, by the way. Okay, I'll do it for free, not a problem. I'll read and I'll tell you the red flags, and then you can take it from there. And also, you can have an accountant or advisor review large or long-term loans, especially if those loans span multiple years, okay, for payments, okay? So if you want to really, get things done faster, remember that you need to check if the APR is higher than the interest rate. Ask for a detailed list of all fees. Look for vague contract language. You want to request a simple amortization schedule. Read the TIL. Once again, the TIL is really important. Read the TIL disclosure carefully. A business lender is obligated to send you the TIL. It's federally mandated. This TIL disclosure is federally mandated. You want to ask about early repayment rules. And also, you want to have a professional review the offer if possible, especially when the loan is really large. So as a coda in today's conversation, I spoke to you about how to read a business loan offer. I gave you the overview, the types, the hacks, the tactics, and the coda. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.